Well, hello and a very warm welcome to Daily Dispatch, a show that gives you all the latest news and updates from the digital ecosystem. I'm Priya Sheth. Thank you very much for logging in. Time now to get you all the top news stories that we've been tracking for you this evening. Well, first up, we have Strides Pharma Sciences biotech arm Stelis Biopharma, which has concluded its Series B and Series C fundraise for a cumulative amount of about $195 million. Post-money valuation for Stelis is pegged at about $350 million. Now, Stelis will be using these funds to pursue its growth initiatives as well as to scale up its business model to deliver promising returns. Well, moving on to the second headline of the day, the Hero Group is making its foray into the edtech space, and the company has also begun hiring for various key positions for the soon-to-be launched edtech platform. Now, the focus will be on disrupting and reimagining university education and skilling for working professionals by offering high-impact online certification as well as degree programs. Well, Indian food tech unicorn Zomato is planning to file a draft prospectus for its initial public offering by April with a fundraising target of about $650 million. Now, reports suggest that Zomato could complete this listing before the end of September. Last month, in the run up to the IPO, the company has increased its paid up capital by 3x. Well, moving on to the final headline of the day, Jaipur-based sales and marketing automation platform for SMEs, NeoDove, has raised about $1.5 million in seed funding led by India Quotient. The company said that the funding will look at accelerating its product development and international growth expansion while expanding its customer base in India.
Well, moving on to our second segment, I have with me someone who has been in news over the last couple of weeks. I have with me Mr. Siddharth Agarwal from Ecom Express. Thank you very much for being a part of Daily Dispatch. I want to begin by asking you about, the journey in 2020. It's been volatile for a lot of companies, but of course for e-commerce companies, this has perhaps been the best time to get a lot of orders taking in. And for Ecom Express, I'm assuming there has been an outpouring of business as well.
Very glad to be here. 2020 was quite exciting. It started on a note where all the activities for our sector were kind of stopped altogether with the lockdowns. It took us a while for people to understand what is essential, what is not. We survived the pandemic. We were prepared to cater to our workforce. We ensured that all of them got their salaries on time. And I think we were quite unique in the industry where 96% of our workforce joined, I think, within a week of opening up the lockdowns in first week of May. And the rest 2-3% were probably in containment zones, etc., and expressed their intention to come back. And I think towards mid of June and July, when e-commerce really opened up, when the marketplaces started selling non-essential items as well, that's when I think the demand shot through the roof. There was a rise of D2C brands trying to cater to the consumers. Many brands who had their omni-channel strategies in place, but were probably gathering dust somewhere, were kind of forced to sell online. So, we saw at least a 60-70% growth because of that. And it was phenomenal, the way our frontline workers kind of stood shoulder to shoulder and ensured that people who were at their homes got all the products that they needed.
But as we speak at this point in time, do you think that this kind of demand or the momentum has been sustained over the last 1 to 2 months?
Typically, there's some element of seasonality in e-commerce. You would see towards Diwali, the orders shoot up, led by wonderful deals and discounts. And even across our culture, right, people tend to shop a bit more. And Q4 is not as strong as Q3, and demand starts picking up again from Q1 every year. So to that extent, if I talk about a year-on-year growth compared to last year, I think it is there. Shift in the behavior of consumers. If I talk about my family, my grandfather would have never shopped online. It's the first time he was forced to shop online. And now most of them have shown an inclination to get hooked onto it or to continue with it because the experience that they expected, it was probably better.
For Ecom Express, of course, there has been a lot of business coming out there, and so has funding. And over the last couple of weeks, you've raised some rounds of funding. So, what is that money going to be utilized in?
A whole bunch of things. We're trying to beef up our data sciences and technology teams. We already have a 20-member strong data science team. which is ramping up further. In logistics in India, you would have seen multiple reports that say that there is a scope for a lot more efficiency. About 12 to 13% of our GDP goes into logistics, whereas a developing or a developed economy rather would have a 6 to 7% of their spend on that. So that comes through better route optimization, route allocation, uh, load allocation to the different trucks, a whole bunch of automation that we're trying to do across centers to move away from manual processing to these large scale automated sortation machines that can sort parcels to, let's say, 1,000 destinations in an hour, up to 30 or 40,000 parcels an hour. So those are kind of initiatives that we're working on to make the parcels ship from, let's say, a seller and reach you ever faster in a more efficient manner.
In terms of future growth plans, I wanted to understand in 2021, what is the kind of strategy that you'll be working with? And if you could run us through some sort of expansion in terms of what is the kind of expansion that you're looking at in terms of, the number of deliveries, the number of the fleet expansion, etc.
I'll first talk about our coverage because that's what we pride ourselves into. We cover 27,000 pin codes in India, next only to India Post. We have the largest footprint of any 3PL company in India. There are probably 100, 200 centers or points in India which we don't deliver, which we will selectively continue to expand to. Very recently, I don't know if you followed, we expanded to Bangladesh. We picked up a majority stake in a company called Paperfly. We believe the macros in the region are very similar to India. The GDP growth is looking very good. The founders are an amazing set of people. That is one in terms of expanding what we do in India into neighboring countries. Then there are newer service lines that we look at. Some of these were born out of necessity during the lockdown. For example, we launched hyperlocal services for the grocery segment. So that we kind of piloted during the lockdown, which we're trying to scale up further. Uh, we've operated so far in the smaller parcels, the 0 to 3 and 3 to 30 kg segment. We're trying to expand our offerings for white goods that are delivered to you, refrigerators, TVs, etc. That is still a problem because if you were to, let's say, send an air conditioner to the seventh floor of someone's home, and if that apartment complex or house did not have elevators, you would have a loader who would kind of push it up the different stories. So all those are challenges that we're kind of trying to solve for the Indian consumer and other players that we're exploring. Uh, there's a fulfillment center business. So in addition to moving parcels from point A to point B, the journey starts even before at a warehouse where the products are stocked. So those offerings of uh, providing place to, let's say, stock, providing space to replenish products, to package them and send them out. We have about 1 million square feet deployed already, which we're trying to scale up to about 2 million.
So, if you talk about the kind of consolidation in this space, we're seeing a lot of consolidation, specifically in the logistics space that's been happening. So, at this point in time, do you think that you're open for any M&E opportunities that could come your way?
We do evaluate many opportunities, but we're very selective in terms of things that we would go for. Uh, we try and remain focused on the problem that we're trying to solve. So far, we've been true to our name, Ecom Express, serving the e-commerce industry. Sorry. So yes, we do remain on the lookout, and if there are good assets that come our way, we'll definitely be open to that.
In terms of overall revenues and growth rates, I wanted to understand over the coming year by 2022, what kind of revenues are you targeting? And in terms of overall growth, what kind of growth are you expecting?
The e-commerce market typically grows at a 30 to 40% year on year. And even if you follow the latest reports from Bain, BCG, or other consulting firms, they project India's GMV for e-commerce to go from about $30 billion to about $100 billion by 2024 or 2025. And we expect that with some consolidation in the industry and with our superior performance levels, we would continue to grow at that rate, if not more. Revenue would be similar because there are other ancillary business lines that we also continue to offer to our customers.
You spoke about international expansion, in terms of Bangladesh that you've already begun with. But in terms of other countries, are you exploring any other international expansion opportunities?
track all the markets. However, this was our maiden expansion, so we'll just wait to see how the integration works. We would not want to put our eggs into many baskets. To see how well the integrations work and how well we're able to integrate systems processes with this expansion. And basis the experience, obviously there are many more markets that we see across the world that we would be interested to get into.
A final question before I let you go in terms of funding. You've already raised some amount of funds at this point in time from prominent investors like CDC, etc. So going forward, do you think with these aggressive expansion plans, you'd require more funding?
See, one thing that doesn't come out in the financials is that we are operationally profitable for the past 3 years because of the India's requirements, etc. Some of the reports show us as a loss-making company, but we've been EBITDA positive, generating operational cash flows for 3 years plus. So if you're a company like that, you don't really need too much of money unless and until your aspirations are to double down and take on things which are really large. So we don't have any immediate plans to take on such opportunities of that scale. Opportunities that we do take up can come through the current coffers that we have or the operational cash flows that we generate.
All right. On that note, many thanks for joining us on this show. It's been a real pleasure speaking with you. Thank you so much.
Pleasure talking to you. Thank you.
Well, time now to say goodbye. Many thanks for joining us on this edition of the Daily Dispatch. I'll see you tomorrow at 5 p.m. Goodbye and see you tomorrow.